I can promise you that my presentation has something for everyone. As you can see, it's an interesting topic. We're going to be talking about the scorecard for digital banking channels, which is a study that KPMG did across Africa. And if we try to reflect and say, one of the interesting questions I've heard is, why did KPMG do this? And it came from the point of, during the lockdown, the pandemic, we're all locked in, and somebody asked an interesting question to say, well, how are you getting by with your banking services? And we all started, either complaining, I'm able to do this, I'm not able to do this, how will I get this done? Personal experience for me, I had about 3 of my cards expiring during the lockdown. And it was a big challenge, to get my card restored. Here I was depending entirely on online commerce to get my personal needs, but then my card had expired. How was I going to navigate this? So as we had that conversation, somebody on our team said, why don't we do a review across all the banks and see the extent to which the banks in Nigeria at the time are able to provide seamless digital services. We did that in 2020. And then by 2021, our colleagues from other African countries were interested, and they wanted us to also do it across Africa. And that's what I'm going to be sharing with you, the insights from that study. Contrary to some of the ways that you've heard about it, it's not a survey. This is actually KPMG deploying a team to literally go and download the banking apps, go on the online banking, and try to perform these journeys and see how far they can go before they need to call somebody or before they need to visit a branch. So I'm going to share, I've talked about the context already, but before we go in, I just want us to, it's a background video from KPMG. It's typically, the state of digital today. For us, digital goes beyond just the front end. Digital has to be through the entire organization, and that's what this video tries to talk about.
The world around us is changing. The digital revolution is transforming how we do business and how we work. These technologies are challenging traditional business models and transforming the products and services we buy and use. Digital channels are giving customers far greater and easier access to products, services, and information than ever before. In the workplace, it is enabling employee flexibility and driving productivity, whether on-site or on the move. At KPMG, we recognise that digital is about more than just technology. It's about creating value and engagement with your customers, employees, and business partners. Digital transformation is about innovation and reimagining the possible. We believe there are 3 core elements to enable you to successfully harness the immense power and create strategic advantage. Create a vision and develop a roadmap and operating model to realise your aspirations. Use customer-centric design to clarify and redefine the customer experience and enhance customer connection. Identify the risks associated with digital products, services, and channels, and ensure safeguards are in place. Digital will transform your organisation and help drive growth.
So, just as I said earlier, for us, when we look at digital, we try to look at it beyond just the channel, because if it's about the channel, there are a lot of banks that have channels. You can always start your journey. The question is, how well can the channel take you to the final destination, which is the outcome of the service? When you go on your banking channel, you don't just want to start a process, you want to finish it, right? How many of us get on the channel just to start the process and are okay with just having initiated it? None of us. Part of the interesting things that we also got from this survey is Okay, so there's a bit of, I'll just, when we move on from this, I'll switch back to this. So we looked at the rate of adoption of the digital channels across the different generations, because when we talk about customers, you realize that the pace of adoption or the affinity for digital is somewhat, there's a demographic element to it. And the interesting thing that we saw is that generally across all the digital channels, regardless of which it was, there's a general sense of a growth in adoption, which we believe that the pandemic further helped to accelerate. Now, amongst the channels, however, you'd see that the banking and ATM channels remained largely flat. Of course, you can ascribe this to the lockdown. It could also just speak, to the fact that customers just generally want to work with what they have in their hands. And another interesting thing, for those of us that are familiar with the African market, is that you'd see that the demography around what we call the USSD, which is the short code banking, you see that you have the biggest adoption there going to the baby boomers. These are people that are not so comfortable with the digital technologies and just basically want such an easy interface. It's almost like using an IVR system. Press 1 to check your balance, press 2 to make a transfer, and things like that. However, the younger people tend to flock around the mobile app, internet banking, as well as the chatbot. Another interesting thing that we discovered here is that there was a surge in complaints. Of course, you'd imagine that during the lockdown, as people encountered any obstacle during their journey, their banking journey, they were quick to call their bank. So we saw an increased traffic going to the contact center. So for this scorecard, we've not tried to look at every possible thing you can do with your bank. You would agree with me that for a service that is not paid for, consultants, we need to really watch and keep our costs. So we focused on 5 specific journey groups. And these are the journeys that we believe are foundational. The journey through which you acquire your customer. How do your customers identify your service? How do they onboard? So that's where you have your customer onboarding. How do they get how do they start that relationship with you? Secondly, we looked at payments and transfers. I believe in Mabel's presentation, she talked about that. Onboarding, payments. That, we believe, represents the significant part of what people do. Now, when you go past payment, people get short of cash, and then they want to access some short-term credit. So we looked at digital lending. We looked at self-service, other things that you may want to do, which is you want to request a card, you want to perhaps lock your card, you want to unblock your card, you want to enable certain services. So we looked at all of that, virtual card management, profile unlock, and things in that line. And of course, customer care. Why? Things go wrong, who do you speak to? In a digital world, when things go wrong, you ultimately then have to, find a way of talking to someone. And we looked at these journeys to the extent that the form factor of the digital channel accommodated it. We looked at it across mobile banking, USSD, internet banking, and chatbot, which is an emerging area that we're seeing in the markets. For this study, we looked at about 26 banks across Africa, sub-Saharan Africa. Yeah, that's an inside joke. I was having a conversation earlier today, and we're talking about Africa and the need to ensure Northern Africa is well represented. So unfortunately, this was the study within the sub-Saharan Africa. We looked at banks in Nigeria, Senegal, Kenya, Ghana, and South Africa. And basically, these are banks that we believe have significant presence in at least 2 or more markets, or significant players in their respective markets. So this is somewhat representative. And as we did this comparison, we didn't rely on just our experience with banks. We also looked at our experience with other fintech apps. We looked at our experience in the new banks, the digital banks, and we tried to just redefine our expectations based on what we are already able to do on other channels. So what's the scorecard methodology? Our scorecard methodology looks at 6 specific anchors of experience. Again, just to reiterate, when you do this type of study, we try to embody the emotions of a customer. We try to immerse ourselves in what a customer would experience if they had to go through this. And we then make our findings based on that. These 6 anchors look at specific things. 1, around the aesthetics. You'd all agree with me, you like it when a place looks nice. We could have had this a summit in an open field with chairs. Does it satisfy the requirement for space? Yes, it does. The chairs are there. Does it require the requirement for sitting down? Yes. But perhaps the hot sun of Dubai would not let us enjoy it. So aesthetic plays an important role. The carpets, the lighting, those are very subtle things. It's the same way when you experience digital channels. It's not just about being able to perform an activity on your channel, but the way it looks. How does that experience work out for you? Secondly is consistency. We all keep talking about omni-channel experience and all, but something that we found out when we did this is that for some organizations, the experience on one channel is totally different from what you'd experience on another, and that can be quite confusing for a customer. Personalization. Here, we're trying to see the extent to which the channel or the service of the bank identifies you as a person, and what are the ways in which this could happen. If I've made a payment to a certain person before, or I've made payment to, say, Mark 4 times, the next time I want to make a payment, do I get recommendations? Do I get personalized recommendations or campaigns based on my demography, based on the things I do on your channel? So that's personalization. Does the bank app give me the opportunity to customize certain things for the way I like to bank? Personalization, how you have it right there. Efficiency. Again, if you want to perform a task, you want to make a payment, for instance, do you do it in 5 steps, 10 steps, 16 steps, and still call your branch manager to finalize this transaction? So those are the sort of things we look at around efficiency. Of course, intuitiveness. I don't know how many of us have had to download our Apple or Android manual to read before you started using a new phone. Show of hands. Have you ever had to read your phone manual to use your phone? Yes? Okay, I see somebody's hand up there. No, I'm just kidding. No, but basically, banking has to be intuitive. It's second nature. You shouldn't have to get on a banking app and need a user guide or a user manual. It should come to you. And where it doesn't, or where there's a risk that won't happen, then the good apps or the apps that were rated well are the ones that provided such guidance to their customers. And then functionality. Functionality is at the base of it. Functionality is where you say, am I able to do what I set out to do? And of course, this then becomes the foundation of everything. But you'd see how we go through the journey of things that would seem inconsequential, hygiene factors. But these are the things that collectively come together to define what the experience is on your digital channel. So what are the things that differentiated the leaders and the followers? Well, we saw that the leaders did certain things very well. When you look at all the attributes of the user experience elements, you'd see that the leaders demonstrated a deep level of understanding of their customer. It was almost like they embodied the customer perspective in designing their digital channels. They also offered a wide range of capabilities that reflect the sort of expectations the customer would have of them. And they are able to offer wholly digital experiences on their channels. I was sharing an experience earlier today. I started a relationship with a particular bank in Nigeria, a digital bank. It's about 6 years into that relationship. I've gone through 2 card renewal cycles. I have never seen or spoken to a human being in 6 years, and I continue to bank. So it's very possible to offer services in a completely digital manner. And I'm sure there are a whole lot of businesses that we still do that. People that shop on Amazon hardly talk to anybody. You order, and you get your order. When we use Uber, things go wrong, you get your refund if certain things don't happen as expected. And that's the sort of expectation that the leading banks are beginning to build into their apps. They're consistent. There's a whole lot of consistency in how they deliver their services. And then they also incorporate knowledge of user preferences. You see it. The customer has a whole lot of control when it comes to defining how they want their interaction to be on the channel. Now, followers, on the other hand, tend to be somewhat behind when it comes to this journey. While they have an understanding, they've started the journey, but for some reason they fall short in certain areas. One is around the disjointed journeys, the fact that you start a journey digitally, but somewhere along the line you realize that you need to talk to a human being, or you need to continue on something, or you need a document that you don't have, or that you were not told that you were required to complete the process. So all such experiences tend to break the user's concentration. It tends to break the experience, and it ultimately affects the ability of such organizations to attract and retain customers. They also don't deliver very engaging experiences. because for them, they focused or they prioritized functionality, controls, risk over experience. And we're not saying that people shouldn't focus on risk. Definitely you have to focus on risk, but then there's also service to be delivered. There's differentiation that needs to be made in the market. And what we're just saying is that you need to pay attention to everything that matters. In the next set of slides, I'm just going to do a bit of unveiling along each of those journeys. And I'm going to elaborate a bit more on some of the things that we saw. So when it comes to digital onboarding, which is the first journey, like I said earlier, this is like the entry point. This is where you make an impression to your customer. Because if you lose your customer at this stage, then the relationship doesn't progress beyond that. Now, some of the bad experiences or the poor experiences that we saw was around time. One of the things that we say in KPMG is that when you want to manage a customer, or the attributes of delivering good customer experience means that you should value the time of your customer. And when your customer comes on your platform and see that a lot of their time is spent trying to complete an activity, then it doesn't show empathy, it doesn't show concern, it doesn't show that you value their time. In this case, the customers had to undergo very lengthy data capture process. In most cases, they were not even sure. I did one of the tests myself. You start the process, and then it says, you need to get a document, and then I'm looking around for it, and the app has timed out. I start the journey again. Now I have my ID card, and then I start that. The next thing it says, oh, you also need this. And so you just see that simple experience has been drawn out so much that you just give up sometimes. But because it was our work, we still had to continue anyway. Delayed account activation. When we go out to initiate an account opening or onboarding on an app, you want an account. You want to operate an account. It's possible that you're trying to receive some money, but then you've completed the process and you get a feedback that says your account will be activated in 48 hours. Wow. 48 hours, I better go to another bank. So there, you've lost the customer at a critical point, at a critical decision point. KYC document upload issues. Again, when you design and you design for the customer, you want to be sure that the process is as seamless as possible. Some of the challenges we saw around the KYC upload is, one, you can upload a picture of your cat as a KYC document, and it will go through. So the inherent validation that goes into that process is not designed in. You also have instances where there's no guidance to say document size limit is, say, 2 MB, and then you're trying to upload 5 MB, and it's just failing, and as a customer, you don't even know what's going on. So those type of upload issues. In certain instances, you have an existing relationship with the bank. You just want to upgrade your account. I don't know how it is in other markets, but in some African markets, you have the tiered account structure, whereby you can open a basic account with minimal information, and then at a later time, you can provide additional KYC, upgrade to the next tier of accounts. So in some of the follower banks or the banks that had poor experiences, making that upgrade was such a Herculean task, you almost have to visit a branch to make that change. So that was also quite a poor experience. Leading banks, on the other hand, embody a number of characteristics. We just try to summarize here. One is adoption of biometrics, for that user authentication process. So they've been able to incorporate leading technologies that help to minimize the discomfort, just leveraging biometrics for that. There's also that document verification. So right there, as you upload, they have implemented artificial intelligence and other means that helps them to immediately validate the document and move you along. So you're not having to upload the document and give the bank, say, another 2 or 3 days to do the background validation. There's also the identity validation, where they are able to extract important information from your ID document. When you scan a document today, if you scan on most mobile phones, if you scan someone's card, the way that's able to pick the important information out of the scanned document, they've also been able to implement this. Omni-channel experience. It doesn't matter which channel you start with, except where the channel has an inherent form factor issue, like your USSD. Obviously, you can't capture data on USSD. And then there's also liveliness detection. Part of the concerns when you do biometric is that can the system be gamed? Can I put a picture of Ladi in front of my phone camera and have it authenticate? So they also have technologies that allow them to overcome some of those security or risk concerns that has traditionally held banks back from adopting this. Now, the interesting part for the technology people in the room or the service providers is what I have at the bottom left, which is looking at the number or the percentage of the banks that we spoke to that had begun this journey either fully or partially. Why am I focusing on this? Because this is where the opportunity lies, either for you as a bank or as a technology provider. So we realized that up to 65% of the bank's mobile applications did support commencing your digital journey. When you look at the ones that would allow you to complete the process, the percentages are much less. And you see that across. USSD was the poorest, about 12%. But what we want to take away, or what I want you to take away as a banker sitting in this room, is the fact that it is possible. These percentages, no matter how little, represent at least one person that is already doing it. So the question we should be asking ourselves is, so why not, right? The next journey we look at is around payments and transfers. And some of the poor experiences here, again, lengthy processing, valuing your customer's time. Too many steps involved. It's not such a seamless journey. I can imagine with some fintech apps, you make your payment on just one page. And then in some banking apps, it's a multiple page journey. It requires a lot of screens, a lot of clicks just to complete that. Beneficiary account validation. I don't know how many people here, if you've ever had the experience of sending funds to the wrong account, show of hands, please. Yeah? Well, you put in the wrong digit, perhaps, and there was no feedback. So the good practices that were made, some of the banks with good practices we saw would help you to address such a concern by publishing the name of who you're about to make a transfer to, and the banks that offered poor experiences, will take whatever you give them and the payment goes. It's not until you realize that your beneficiary hasn't received value that you then say, oops, I sent it to Ladi instead. I should publish my account number after this, just in case. Hidden bank charges. Again, customers value transparency. When I start making a transaction, I need to be able to say that this is going to cost me X cents. In some cases, good practices, the customer is shown that information. In other cases, it hits the customer as a surprise. How do you do a transaction for a certain amount and then you receive a charge, that you were not aware of? Payment receipts. Again, people complete processes and they don't even know. I think it was during the demo we saw that tick mark seems inconsequential, but then it's feedback to let you know you have completed a process. Imagine you just hit send and the page goes back to the home page. How do you know you've completed the process? Do you then have to go to a transaction history to check? So little things, they're little things, but as you bring it all together, it adds up to offering differentiated experiences. Some of the interesting things we saw in the payment space is, one, the leading banks are beginning to recognize that the customer would likely not always have his or her card on them, and therefore offer cardless withdrawal services just to give you access to your cash when you have your phone. Biometric authentication, depending on the number of digital channels we interact with, a lot of us are already overloaded. I'm personally saturated with passwords and PINs, so I usually value when my bank gives me an alternative form of verification, and I think biometric is just great. One-tap payments, evolving from that cumbersome process. If I've made a payment once, if I've registered a beneficiary once, the next payment experience shouldn't have to take me through that whole process. I should be able to go quicker. QR code-based transfers, and of course, integration with wearables. This is something that we found, particularly in the South African market, where banks are beginning to incorporate payments into wearable devices. Digital lending. Every now and then, you spend over your budget, you find out that you're in that tight situation and you want to access credit on the spot. It's a little amount, you're about walking into the store, you want to access credit quickly. How many banks offer digital lending? From what we saw, not so many. It's a big area of opportunity in some of the African markets. So the people that offer poor experiences will find out that the digital lending was just not available. The lending is so traditional that it almost requires you to sit in front of an account manager, a branch manager to initiate lending process. Yes, we know that there are risks involved when it comes to lending, but then we are also seeing a whole lot of fintechs, we're seeing a whole lot of new banks taking their chances in this space, defining the risk limits and using more sophisticated algorithms to make lending decisions. So inaccessible lending initiation. In certain cases, information about the bank's lending products are not even available on the digital devices. So the loan inquiry is even not there. Loan simulators. Sometimes people want to take credit. They want to know what does this look like on a 24-month repayment plan? What does this look like on a 5-month repayment plan? Digital leaders give you all the information required to make a decision. On the flip side, with the followers, absolutely no information. It's almost like you necessarily need to speak to a human being to assess lending. And we know the world today, credit is such a driver of growth that you have to make that access to credit less cumbersome. Some leaders in this case, we can see there, the loan simulators, adopting automation, and by virtue of this, they are able to accelerate the lending journey. They are leveraging things like artificial intelligence, alternative data to provide credit scoring. Depending on what market you look at in Africa, we have different levels of maturity when it comes to central information systems for credit scoring. In some other markets, I know in the European market and in the North American market, you have a very robust central credit system, but it's something that is just being built up in most markets. So people have to depend, especially for people that have not had access to credit before, you literally would not find any credit history on them. So innovators are going beyond to say what other data points can be leveraged to make an informed decision to grant credit. It could be the person's spending pattern, it could be the person's income, it could be the person's location. And we're seeing people making use of all this type of aggregated data from their own data as well as third-party data to make informed lending decisions. And interestingly, when you look at the outlook on lending, availability of at least one form of lending enabler, you then see that, again, the stats show you mobile is at about 36% of the 26 banks we looked at, 43% when it comes to internet banking, 32%, none at all when you look at chatbot. Self-service. Now this I can relate with because this was where the whole story started. This is where the initiative for embarking on this digital channel scorecard started, being able to access service during the pandemic. And you find out that a number of banks still do not support end-to-end digital self-service. The journey can start, but then it can be complex. So things like card requests, are not available on such channels. Limited card control, delayed card status notification. When is the card going to be ready for pickup? And then request tracking, as simple as it is. We find out that some banks are doing it well, some are not. And a little anecdote to share is that when I had my experience, I talked about having about 3 of my cards, expiring during the lockdown. So the cards that I use today are the cards that I was able to renew digitally and where they were able to send my card to me during the lockdown. For the other ones that required me to visit a branch, I am still procrastinating and hoping that one day I will get around to going to the branch to pick up the card. But you can see how providing the right digital service can impact the way or the volume of business you get from your customer, because on one hand, a bank has made the journey seamless. I've been able to get that. And then on the other hand, I'm thinking about the day I will have time to go to the bank. I need those cards, no doubt, but it looks like for as long as I'm not able to do it on my device, I keep pushing it forward. And that's why it's important to make some of these things available for your customers. Again, no-brainer, wholly self-service. Leaders are providing whole self-service. 100% card control. I had an experience with my card last night, just trying to make a payment here. And then it turns out that I didn't inform my bank that I'll be traveling, and as a security feature, my card is not working in Dubai. Good, I like it. It shows I'm being protected. But now I have to make a call to somebody to enable my card. So between making calls and putting on hold at international roaming rates, sending an email, at some point I just had to tell the guys, I'll give you cash, and then I'll sort this out with my bank. But, in the same vein, I've had an experience with another bank where I have full self-service in terms of location, enable my card for POS, disable it for online, disable it for Angola, enable it for Nigeria, disable it for Ghana, so you have that level of control. So that's the sort of expectation that the customer of today has, that level of control when it comes to how they're able to manage their relationship with their bank. We're also seeing adoption of conversational interfaces. People want to, are leveraging artificial intelligence to just guide the customer through different experiences. And of course, the last point there is beginning to go, the banks that we're seeing that are beginning to go the extra mile and going beyond just banking. In this case, thinking ahead of the customer and saying what other partnerships, what sort of API integrations can we explore to extend the services we're able to provide to our customers. So we're seeing the leaders doing a lot more in terms of extending their reach beyond just banking. When it comes to customer care, I'm sure that everybody has had at least one experience with a customer service. For me personally, the most irritating experience when it comes to assessing customer service is repeating myself. So if I've made a call and I've reported an issue, the next time I pick up the phone to follow up, I don't expect to start the story all over again. Now, some of the poor experiences here involve you repeating yourself to as many people as you interact with till the issue is resolved. Again, that would appear that you don't really know the customer. Other channels that we saw also did not provide sufficient guidance for a customer to report an issue. When we talk about sufficient guidance, the use of simple things like a complaints tree that categorizes issues by virtue of, so it's a card problem, then is it a failed payment, is it a card renewal? So the leading banks we see are able to provide that sort of guided complaints management process that ensures that the customer can get a quicker resolution than just having a text field or an email where you could write, if you're like me, I could be so summarized that you don't even know what the problem is. And in another case, somebody could write you a 2-pager to tell you that the payment failed. So sometimes you need to guide the customer to ensure that the resolving team get the exact information they want from the customer. So that's also one of the things. And of course, resolution time. We know that not everything will be resolved at a snap of a finger, but keeping the customer engaged through the process to say, well, this is at this stage, will be resolved in 24 hours, in 5 hours, or even a simple notification to say it's now resolved, try again. So those are some of the pain points. And of course, the sort of technologies that we see that are being adopted here, virtual assistants, CRM integration, the point about having to repeat yourself, we saw that banks that had sophisticated CRMs were able to pick up the conversation right wherever you left it off. You don't have to speak to the same person to believe that you're getting attention. Automation, a lot of automation in the issue resolution space, use of workflows, service level agreements, just things that basically keep the resolving team on their tools to deliver the service promise. And of course, analytics, the use of big data to ensure that, beyond just solving the customer's problem, that opportunity of engagement, it's a missed opportunity for a lot of us in the banking space because we focus on solving the problem, but we don't go beyond. I think that every time you spend with your customer is golden. So if I've solved your problem, maybe I might just be able to sell you a mortgage service. You never know. But you can't do that if you don't have the right information. You are more likely to irritate your customer when you make it a wrong proposition at the right time or a right proposition at the wrong time. So having that in place definitely helps. In closing, I would just like to talk about the 3 frontiers, what we believe banks and service providers should focus on when it comes to innovating digital channels. One is embedded finance, and we're beginning to see this take up in certain markets. I talked earlier about going beyond banking. Embedded finance looks at things like embedded lending, embedded payments, because at the heart of it, what your customer is trying to do is not necessarily a transaction. Your customers are trying to achieve a need. If I'm a store to buy groceries, payment is a means to an end. It's just facilitating that value exchange. I'm not making payments for the sake of it. I'm not accessing credit for it. So banks that are rethinking their service model to ensure that the bank is invisible and just enabling the objective or the transaction objective of the customer, are the ones that are now beginning to differentiate themselves in the market. Omnichannel, I'm sure we can't say this too much, just ensuring that you do this digital transformation journey in the most efficient way possible. There's no point replicating things across different channels. You never get it right. Definitely things will be missed. And we saw a lot of that, where a bank has such a wonderful experience on one channel, but for some reason it's not carried through to the next channel. Omnichannel definitely helps that. And then last but not the least, in fact should have come first, is designing for your customer, designing for your user, or putting your user right in the middle of what you're trying to do. We believe that focusing on these 3 important things will definitely help to transform the banking experience. Thank you. If you want more detailed information about the study, you can always download it here. Scan the QR code. There's also a URL there. And I'm sure you can talk to any of the CR2 representatives to share the details with you.